Evening, everyone. Hey, it is Shooter Scott Henderson. Hey, we are going to go over Bitcoin and a couple sectors and SPY and NASDAQ. Of course, at the end of our presentation, please do review our disclosures. So let's start off with IBIT, aka Bitcoin. According to IBIT, it's done at this 54.28. However, if we go to futures contract, we potentially have a head and shoulders here, left shoulder, head, and a right shoulder up here. So when we get back up to 102 to 104 in that range, obviously you're your own captain, so it's your call. You're going to make the decision here. Personally, I have 2025 $10 puts in IBIT as my hedge that I put on a tranche up here at 103, and I added a little more here at 107. They're in the money, decent. I mean, I don't have like a 3x trade there or anything, but at this point, it's insulated about 30% of my decline, and I did just shy of 3% of my gains in Bitcoin. So if you are concerned about this right shoulder manifesting down to trend support, then you may want to add some IBIT puts or trim. Obviously, that's going to be all right. So let's jump over and look at some sectors real quick. HYG looks to me like it's about done. Much more of a pullback than I really would think would happen there from the Fed's decision here. But there's a couple things that are telling us they are on one side of the fence. They're thinking we have a decent drawdown, and according to the longer term chart, we go out to the weekly here, we're going to be in this range between 73 and 80 most of 2025, and it goes all the way out to 2026. So till March of 25, we're basically in this price range of 78 bucks. Then after that, we break down about $2 lower, put in a back test, then we break down to about 73, about $3 lower. Then we put in our floor somewhere around 72 in February of 27. So according to this, corporate yield has a rough year. All right, let's look at TLT. Now, we have a huge buy zone around 93. Obviously, we're well below that. I would think we get down here to this 86.48, we get a decent bounce. I was actually disappointed because bonds are telling a different story of what occurred in equities yesterday as far as a drop. The worst Fed response since we've had in the market since 2001, over 20 years. But that's significant twofold. One, that it occurred, and two, it's probably a significant bottom. So at that point, I think we do want to shop. Unless we come off tomorrow or Monday, I don't think we continue. It's unusual that we would. I think we had everything come off yesterday. Everything was repriced based on the future projections of GDP, based on the tariff number. So they've built in this factor and realized they were wrong about this the last time Trump was in. If it wasn't for COVID, a lot of the things that happened wouldn't have occurred. We would have been much better off economically than we were. So I think they have the wrong side of the coin there. But that's my thought on bonds and TLT and high yield corporate bonds. Looking for my charts here. Okay. SPY is telling me we have a lot of downside. However, I come in here and say right where trend support is. Trend support means that we have to close below 566.40 for the uptrend to break down. And even in that case, it's an overshoot for me. So, really down to 532, it's done nothing wrong. Now we have our fib extension. Now realize these fib extensions measure the prior wave. So they are attached to the Elliott wave counts. So the projected retrace off of this high at 609 is down here, could be as deep as 447. However, we got a lot of buyers right down here at 405. There are going to be a lot of people jumping in the market down there we get down. We didn't have a lot of people jumping the market here. And the reason is because it wasn't a big retrace. It was insignificant in the grand scheme. This was a bigger retrace that we got in August of 20. This was a bigger drop. All right, so let's look at the NASDAQ. There it is. Now, the NASDAQ indicates we're going back to trend support. Also have a bearish outside bar, which is something I've added to the mix of things that I look at. I'm using it as confirmation. So in most cases, your drawdown is equal to one more bar of that breadth. So between 531 and 512, right, which is 20 bucks. So, our minimum is going to probably be down to that 494 where we get in the NASDAQ as far as a drop. We didn't have a lot of follow through, so the hindsight into the close, the 18th, to sell the SQQs and sell the January 515 puts in the QQQs was spot on. If we do not have a recovery, and I'm going to come in here and come down to a time frame, but we need a recovery bound to at least 522, 524 by Tuesday, and we need to get quite a little bit of euphoria. One thing that's concerning on the 4 hour are on that leg, we are confirming, which indicates we are looking for at least one more lower low in price. So we probably don't get that bounce. So that 513.83 is probably not done. We're probably going down to this 494 when I look. And we probably come right down to here, and we need to see buyers come back in. We need to see the dip buyers come back in. Now, all of these projections that we have, this is just a strat that I like the visuals of where it potentially go without me having to draw all the charts. All right. This breakdown, as this chart reflects, is very viable from where we are because we're not well overdone. Look at this drawdown, how deep we were here. And, if this leg right here is this first leg, right? Then we reconfirm, right? And then we get a divergence. So you notice the mound structure that occurs there on the downside when you have a decent drop. This is a much more aggressive slope than this. So structurally, we could come down to 433 here, 430 range. But I can't tell you the number of times I've tried to chase that downside and the dip buyers come back in. That, the last 16 months, I don't chase that deep. Because it's not work. And everything the Fed said, even the consequences, everybody's thinking about what the tariffs are going to do, the condition of the market and the economy didn't just change because they flipped the switch. It was our perception. Now, across the board with selling implied to me that everybody readjusted. They started trimming, and they didn't buy back until they got their readjusted price. So the fact is you had that continued selling where they were exiting as far as a little bit of year end, a little bit of OCDEX, a little bit of the Fed, it's collectively just was a big moment there. But what I think is important for where we are is how little the follow through was on today's camp compared to basically we got the push. We followed through equal to what, $3 to the downside. Our range today was 521 to 514. So it was $7. The average range of the NASDAQ in every given day is $8. So this was an average day. It just was a down day. So the question is do we get this? I don't have any major signal outside of, I have one sell signal up there. I don't have conviction. When I get one of these red candles to the right side, that confirms further downside for me. I don't have that right here. So, however, if you still have long positions on it, I hope to God you don't, or hope to God you have a small book, okay? Some specific names, that obviously have been doing well. Hedging seems expensive to me, but I have no problem with adding SQQ, small tranche of SQQs, because I'm looking at this chart to the upside, as your risk hedge to the downside. So that way you can hold more position. The reason I like common shares over the options here, because you don't really have to sell them until the event happens. So you can, let's say we don't get too much more, and then we get a back test, takes it out, they get a little more in a back test. Each time you get a drawdown, and you're watching that on whatever charting app you have, maybe add another piece. So, you add some at 31, you add some more at 32, you add some more at 35. Right? And now you've got a decent sized hedge. So you scale into it like other positions. And that can work really well if you're going to keep a lot of risk on the table during a drawdown or a potential flip in the market towards a bear trend. Because obviously position trades, if you were able to hold those positions for a long period of time and weather the drawdowns, just like selling covered calls, I like SQQ as that option. And the main reason is because if the fangs come off, everything else is going to come. So the MAG 7 holds up, the market holds, which brings me to the MAG 7. So, and I'm just going to real quickly go through that and I'm done. Nvidia, downside to 112. Amazon, downside to maybe 201 to 182. Meta, according to this, it might be done. But again, I have a projection of a much deeper retrace. Netflix, maybe 806 to 722 range. So we're not done. Google potentially is done between 181 and 169. So, $10 to 40. Microsoft, to me, has a significant downside here. Both Microsoft and Apple were the two that I thought had the most downside when I was looking at them before this drawdown. Now, ironically, they all got a bid. Every one of these were green by 2% or more when we opened this morning. So they definitely came back and bought the MAG 7. Now, if that lands, the whole market's going to follow. So just follow the MAG 7. It's going to tell us where we're going to go. I'm going to end with that, folks. Great trading. Until next time.